Hey, make sure you stay to the end where we talk about how cryptocurrencies might soon be divided into two classes and what it means for you. Hey everyone, me Kevin here. We gotta talk about this major announcement of an SEC task force for cryptocurrencies and what it means for you, especially if you are interested in cryptocurrencies, but frankly, even if you are not. Now, I have a pretty extensive background when it comes to securities, given that I've gone through not only Series 7 licensing, but also the hard ones with FINRA to regulate compliance for a broker-dealer, the Series 24, the 27, the 14, you name it. So I've sort of lived in SEC land and FINRA land for quite a while, and that's basically where crypto is now going to go under a Donald Trump-announced crypto task force, where the now interim head of the SEC has been assigned with establishing this task force on behalf of Donald Trump. So with that said, what I'd like to do is take a sip of this coffee and then go through what this means for you as a retail customer, but then also what this means for the broker dealers and how we might actually start being able to do actual fundamental analysis on cryptocurrency. This is a game changer, and I'm talking more than hash rates for Bitcoin, okay? This is a game changer for crypto, and I'm really excited to talk about it. So let's take a swig of this, and we're going to be doing a lot of fundamental analysis on this channel on cryptocurrencies. This is going to be really fun, and we'll be doing it in the Trumponomics course as well. By the way, I feel a little under the weather, so I haven't expired the coupon yet. I'm probably gonna do that today at about 4 o'clock when I get home from bowling with the kids. Might be closer to 5 o'clock. So you still have a little bit of time if you want to go to Meet Kevin and check that out. MeetKevin.com. You can see everything on the Trumponomics course. Okay, so let's first start with retail customer. What does it mean that there's going to be a crypto task force? Is this good or is it bad? That's actually very good. In my opinion, what this means is that a security, or in this case, a cryptocurrency, which if it's regulated by the SEC will be considered a security, will require registration. When a security gets registered, a few protections get triggered. First, you have to have a disclosure of all of the beneficial insiders at the company. So, in charge of this token or coin, if you will. So in other words, the organizers are going to have to disclose themselves. They'll probably not only have to disclose who they are, where they are, any kind of legal disclosures they have to protect themselves from lawsuits. So if they've been sued for fraud before because they rug pulled someone, they're going to have to make that disclosure, right? So you're going to see a historical disclosure list of the people who are actually founding these tokens or coins, or who are the insiders, basically. I wouldn't be surprised if they also require some form of basically board, where they say, okay, here are your internal executives, here's maybe a board. Maybe there's even a requirement that one or two of the board members have to be an independent board member in order to actually qualify for registration with the Security Exchange Commission. This would mean that outsiders, or independent outsiders, quote unquote, they could be friends or buddies, right? But just basically people that aren't being paid by those insiders, with the exception of disclosed board member compensation, those individuals would basically put their reputation on these tokens or coins with all of their related disclosures. And so now all of a sudden what you have is basically a whole list of everybody who's involved on the inside. So when there's, let's say, a Trump token that launches, you know, okay, what position does David Sachs have? You know, all holdings over 5%, for example, would also likely have to be disclosed. So, you know, did David Sachs get a little 10%, insider boost for his Trump token holdings? Did Donald Trump have 50%? We can try to backwards this by looking at some of the largest established wallets. But, as with the Trump token, there were a lot of wallets where all of a sudden we're like, how come there are sales popping up, but we never saw them buy any? Well, because they were established insiders and they were basically just issued, their share, if you will. All of that would have to be disclosed, and we'd have to know exactly what their wallet addresses are, but also likely their identities. So more than just a wallet address, you'd have to have wallet address and identity, which really gives you an opportunity then to kind of follow somebody, unless of course they're like tornado caching, follow somebody through cryptocurrency. It becomes extremely, in the world of crypto, it becomes very transparent, if you will, for who insiders are in the world of crypto, which in my opinion is pretty wild. So Let's see here. Oh yeah. Okay. So what does this mean for you? Well, it probably is actually going to be really good from the point of view of like legal protection. Because if, let's say, Hawk Tuah goes in with her cohort or 5 or 6 friends or whatever, or the people who approached her and said, hey, you should do the Hawk Tuah coin, we're going to know who everybody was on the inside. It's not going to be a random crypto address. So when there's a rugging, you know who to send the lawsuit to. Now, that's intense, because all of a sudden those initial wallets are going to be linked to a person, which is going to actually make it a lot harder to rug someone. Now, obviously, Hawk Tuah, we know who she is, but we don't know who everybody else involved is, right? They could be anonymous wallet addresses with fake names that were, working with her over Zoom or whatever, and you never have any identity verification. So how could you possibly sue them? You can't. So really what you're getting is with a registration of a security, you're going to get a very, very, very transparent ownership regime, which will then unlock a whole new world. A whole new... See, he's a little under the weather, so I can't sing. Not that you want me to anyway. For cryptocurrency lawsuits from attorneys. So, like, if you want to become an attorney now to like prepare for what is coming, how do I hear like law hack out there? It's like your cryptocurrency law firm. I got to go buy that domain. That's a good one. Anyway, so now what you've got to do is you ask yourself, okay, cool. So again, what benefit does that have for you? Well, the benefit for you is there's a lower chance that you're going to get rugged. For example, when I do a fundraise for House Hack, which we've got the Reg A coming up soon, that has to go through a qualification process with the Security and Exchange Commission. Like, you basically have to get naked with the SEC. And the whole point is so that, like, you don't screw somebody, but if you do, they know how to come after you, and they just like ban you from the industry and from ever being able to do anything again. And that's, part of why me, like personally, I've always been like, oh my gosh, I'm about to turn 33. I got a long career ahead. I could make a great stock pick. I could make a bad stock pick. But if you just do something that makes people question your integrity, you're screwed for a long time. It's really bad. And so my goal is always to just be here and be like, look, I'm going to do my best. I'm going to make mistakes, like decision mistakes, but I don't want anybody to question my integrity. So that's why I try to teach my kids too, all 7 of them. Okay, so this is really interesting. It gives you this rugging protection. I also think there'll probably be like some regulations around like, hey, you're not allowed to rug, but you'll also probably have lockup periods, right? So insiders who do an initial coin offering, like a registered, so like an RICO, a registered initial coin offering, like an IPO, they would probably only get through the qualification process or the registration process with the SEC if there are certain investor protections embedded in those. We don't know yet what those are going to look like. I just expect that we're going to have a lot of information on insider information based on the existing securities framework that we have, but then also some additional protections on how to prevent rugging. So in other words, look, if you don't have to do this for stocks. You don't have to put in the lockup when you IPO a stock. Most people do, though. Most people who IPO, they put in like 180-day lockup, 6-month lockup, right? That usually isn't required. It's just so common practice that it's probably going to happen in crypto as well. So now you'd have a 180-day period before, let's say, the insiders of the Trump token or whatever can start dumping on you, which they've already started dumping, right? At least what we're seeing. I'm not saying everybody is. I'm not saying Trump is. I'm just saying somebody who never bought is already dumping, and there are others. Okay, so now what does this mean from the broker-dealer side? Well, the broker-dealer side is actually a little bit easier. Excuse me. On the broker-dealer side, once a filing is registered, guess what this means? There are now public documents that a broker-dealer like Robinhood or any registered broker-dealer, right? Because Coinbase, for example, isn't a registered broker-dealer. They'd have to become a broker-dealer. They're a crypto exchange, but they're not a broker-dealer. Robinhood is a broker-dealer because there's Robinhood and Robinhood Crypto. Robinhood Crypto is not a broker-dealer. Robinhood is a broker-dealer. So the two different entities have the different regulatory licenses. But now if crypto is going to get sucked into the broker-dealer work, world, Robinhood already has the established infrastructure for that, which is huge and gives Robinhood a huge leg up. Now, once registered, public filings will be available. So you will be able to look up an initial filing like an S1. We'll be able to look up all of the insiders information, the insider trades that happen, when the insiders are dumping, when the insiders are buying, when institutions are taking a larger stake or reducing their stake, usually above or below 10 or 5%, right? We'll get to see all of that, which is great. All of those filings will show up on likely every token or coin. Will have a website and there'll be some sort of like investor relations page where you could get these filings, or you just go to the sec.gov website and pull it up through what's called Edgar, their filing system. Okay, but what else does this mean? Well, it also gives you protections as a consumer that now your broker dealer isn't doing funny things with the money they're lending you. So for example, let's say you deposit $100,000 of cash into a broker dealer, and then you're allowed to borrow stocks up to say 50% Reg T margin. That's your initial margin. In English, basically you could go borrow, you could use margin. You have your 100K cash, use margin to borrow another $100,000 of stock borrowed. In this case, it could be crypto borrowed, right? So you deposit 100K, you could go borrow another 100K and buy Bitcoin, let's say, if you want, right? Or whatever, Trump, whatever you want. Okay, cool. Now you have $200,000 of equity. Well, the broker dealer can lend to somebody else up to 140% via Regulation U against the crypto you borrowed. So in other words, they could turn around to somebody else and lend out another $140,000 in margin lending to somebody else, but that's the max. That's the cap. So your account has $200,000 of equity. The broker dealer can lend $140,000. That buffer is designed to give the broker dealer some protection from basically going bankrupt because they gave away or lent out too much of the money you deposited. In this case, there's still a $60,000 buffer. They lend $140,000, but your account has value of $200,000. Right? So this is all very, very useful. And then there are also minimums, like, if your equity portion goes down under 25%, well, you're going to get margin called and you're going to have to pay off that margin. So this way on both sides, margin for the customer, Regulation T, margin for the lender, Regulation U, all of a sudden the broker dealer is regulated and there's a lower chance, I'm not saying they can't go bust, but there's a lower chance that the broker dealer goes bust, like, I don't know, anybody ever heard of FTX? That's a disaster. That's an example of an unregulated exchange having no policies around what they can do with the deposits that they have or the loans that they have. And all of a sudden, when you need the money's gone. See, a broker dealer isn't actually allowed to lend out your cash. That $100,000 cash has to go into a separate account. If you look up a Robinhood financial statement right now, you'll actually see cash segregated cash. What is that segregated cash? It's money that sits in that account and is available for immediate withdrawal. So if that broker dealer goes bankrupt, guess what? You could go to the bank that is custodying your money, because Robinhood is not a bank, and you could ask for your $100,000 back from the bank. You don't even have to go through Robinhood because you're listed as a beneficial recipient of that $100,000 of cash. Robinhood can't do jack anything with that cash. Yeah, I think there are some ways they can, well, this is why they want you to put it into their cash sweep account, which then it makes you eligible for yield. And so they kind of play the game with this a little bit. That gets a little bit more complicated. But the point is, from a broker dealer, cash that hasn't been swept to a yield-bearing account, cash that just sits there is a protected item. And it has to be segregated. And so again, this protects you from an exchange, or, well, an exchange will probably be separated. That's another thing. A broker-dealer going BK. Okay, so this brings up the whole exchange aspect. You know how there's the New York Stock Exchange and how the New York Stock Exchange isn't the same thing as Robinhood, where you get to basically interface with the exchange through? Like when you go swipe up on a New York Stock Exchange listed stock, you're doing it through Robinhood or Fidelity. Well, that's basically you putting an input into a broker-dealer, the broker-dealer putting the input into, let's say, the NASDAQ or the NYSE system, the New York Stock Exchange system, and putting in an order that then market makers at these exchanges can fulfill. And then you get your trade confirmation back, and the broker-dealer is responsible for making sure you're getting the security you were promised. You gave Robinhood $20,000. You bought $20,000 worth of Tesla stock. They're going to make sure you got your $20,000 worth of Tesla stock certificates, and they'll hold them electronically, usually in what's called book entry record, which is basically just they put your name on a spreadsheet, right? And they verify that all of this is correct. And then Robinhood is regulated by this agency called FINRA. That's the one where I was talking with all the licenses about. And that agency is responsible for basically investigating Robinhood all the frickin' time to make sure that Robinhood is actually making sure you have your share certificates, that they're not violating these percentages. So, like, the regulatory infrastructure is there. It's really, 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 really complicated. Like, this is why you keep seeing banks and broker-dealers get fined all the frickin' time, because it's almost impossible to follow all of the rules perfectly. Like, if you accidentally, let's say you work at Robinhood, and you accidentally text a customer on your phone, you need to, like, screenshot that text message, send an email, or somehow electronically document that, and move that conversation to somewhere that is documented. So, if otherwise, big fines. So, like, all of that sort of regulation is all designed to protect the customer. Now, a lot of people usually hear regulation, they say that's bad. But again, it prevents the exchange from going bankrupt, the broker-dealer from going bankrupt, and the customer from getting rug pulled. So, this is where we get to the fundamental analysis aspect, where once all of this framework is in place, then any ICO that is registered or coin or token that becomes registered, we can look and go, okay, who truly are all of the insiders of Hex coin or whatever, right? Who are the insiders? Where do they live? Do they have any licenses? You know, what insider connections do they have? Who else has ownership? Who is legally responsible? Who do I sue if this goes bad? All of those things are now in public filings, which we can now do fundamental analysis on, because now the promises these tokens or coins are making aren't just on a website that gets edited, but rather they are in public filings that sit there forever. It's kind of interesting. So I am fascinated to see where we can go with all of what is happening. And I think it's, quite frankly, really, really exciting. Now, in the short term, Bitcoin has moved up on this announcement. If you look at Bitcoin right now, we are sitting at 106.5, which is definitely up from the announcement. This morning, we were trading a chunk lower. Yeah, we were down over here this morning at the 102 line, and you can see we've certainly shot up after some of this news, which is great. Now, the question is, how soon can we expect this sort of regulation? And the answer to this, folks, not soon. It is going to take a while for them to put together all of this anti-rug pulling framework and everything else. So hold your horses. It's going to take some time. This also means you likely are going to have two classes of cryptocurrencies, registered and unregistered. And it opens the whole door to, is everything that's unregistered okay? And are those kind of just going to be treated like, you know, off exchange currencies? And everything that is registered, is that going to have more interest? Like, in other words, if a Hawk 2 is like, I got a new meme token, people are going to be like, did you register it? And if not, then it's going to potentially look more scammy and risky than something that's registered, which could still be problematic, but at least might be legally registered. So I'm not saying you can't still get the moonshots, because just the nature of cryptocurrencies, there's usually very little liquidity. So when the order book pumps up a meme token or any kind of token or coin or whatever, you skyrocket in valuation very, very quickly, because you're taking a small slice that you're selling to high demand and you're making the rest of the pie worth a lot with very little available supply. That can still happen, registered or not, but you'll end up having two classes, and I suspect attorneys are going to make a lot of money filing these things, and you're going to end up with 2 classes of cryptocurrencies. My guess is to put together all of this regulatory framework as soon as possible will set us up for the earliest actual registered ICO in 2026. That's my guess. Give them about a year to get this done, because that is a lot. And broker-dealers and exchanges have to get ready for that as well. They have to get registered. Honestly, there might even be new licensing, like the Series 69 license for cryptocurrencies and crypto trading that you have to get. And then the Series, 420 for options trading. I don't know. Anyway, thank you so much for being here. I hope this was helpful to you. If you like the way I explain things or my perspective, go to meetkevin.com, check out that Trumponomics course. Everything related to Trump and opportunities out there, we cover in that course almost every single day when the market is open. Hope to see you there. Thanks so much. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.